Welcome back to Market Call. Time for Gordon Reid's top picks. Top pick number one, Gordon, Apple.
Yes, Apple is a company that we've owned, a stock we've owned for many years. I think 16 years. We bought it in 2006, Paul. And it's obviously been very, very positive for our clients. It's trading about 20% off its highs. We think a good opportunity to enter Apple at this point, but it's trading there for a reason. Obviously, the shutdown in China is a problem for Apple, not only from a customer standpoint, but also from a supply standpoint. But they're supply chain experts, and in particular, Tim Cook, their CEO, comes from a supply chain background. So we think that they'll be able to navigate through this. From an investment standpoint, they have 1.5 billion installed devices around the world, and they have a 93% loyalty rate. So you just have to apply the math, and this is a company that has a captive market. It's a consumer company. It's an innovator. They spend close to $20 billion a year on R&D. They produce $90 billion a year in free cash flow. They'll do over $100 billion in revenue this quarter. They bought $27 billion of stock back in the March quarter. A lot of great things to like about Apple.
Okay, number two, Booking Holdings. You think this stock will do well as travel rebound, demand for travel and actual travel rebounds?
Yeah, I couldn't help but note in your headlines, Paul, you talked about Heathrow encouraging airlines to stop selling summer tickets because they were at capacity. Well, Booking is a travel company, and it's the answer to the old travel agent model. It's an online model, highly leveraged, which is a good thing. By leveraged, I mean operating leverage, not capital leverage. So it doesn't have a lot of debt. Its operating leverage is very high. And they own Booking.com, they own Kayak, they own Priceline, they own OpenTable, Rentalcars.com. You can see the picture. They're putting them all together. They're cross-selling. We think they'll earn $100 a share in 2022, which gives them a very reasonable multiple in the high teens. And we think by mid-decade, they can earn up to $150 a share. So great entry point for a company like Booking.
And lastly, FedEx, a company that we all know very well. It's gone through some changes. It's replaced a CEO, and it's also been pushed by an activist investor.
Yes, the activist investor being D.E. Shaw. They're encouraging them to get control of their cost base, be more diligent in the management of this company. Fred Smith was the founder, did a fabulous job over the decades, was there 51 years. He's retired. There's a new CEO at the helm. We see great things great opportunity for FedEx on a number of levels. Number one is that deliveries of packages is just growing exponentially out of desire for shortened times between sending and receiving a package. E-commerce is obvious, and just replacing the old style of delivery. But there's also many opportunities on the cost side. We talked about electrified vehicles, cost savings there. What about drone delivery, where you can cut down on the need to employ people to deliver through FedEx trucks by using drones? And we already see them. 2 or 3 years ago, they were just a fanciful idea, and we're already seeing them as part of our everyday society. So lots of opportunities there. And I guess as the cherry on top, they trade at about 10 times earnings. So a very, very reasonable entry level for an investor. So a lot of good things to like about FedEx as well.
Do investors need to be confident that a recession is not on the horizon before the stock can outperform?
Yes, but that's not to say that they shouldn't take an entry level. As I said earlier, Paul, recessions come on all different shapes and sizes. They don't have to all be long and deep. We've had recessions that have been short and shallow. recessions end. So my way of thinking is buy good companies. If the economic backdrop gets in your way, be patient. We can all do that. And that will lead you to good investment results.